Hey, what's going on, team? Quick little recap on the overall day. Overall, $628 profit and 78 cents. As you guys can see, all positions are closed. A total of 16 orders were taken today. My first day trade at 7:45. I did a very poor job cutting losses. If you're part of the Learn Plan Profit team, you would have seen that. So automatically, I was down $250, and I ended up taking my last trade at 12:27. So it wasn't the most effective nor efficient day when it came down to trading. But on DGAS itself, I made $278, and then surprisingly, I actually took a position on UWT. Today was the crude oil report. UWT aggressively sold off. We began to see signs of a reversal. I added to my position size, and I ended up selling right around 11.83, and it continued to push up with a full recovery. So I was really surprised how it recovered. Super grateful that I was able to get a small little piece of that, again, when that direction and that trend was in the sense of my friend. So I locked in $350 here. Again, all positions closed, $628. So let's go ahead and talk about the main topic about this video. I hope that you guys enjoy.
Hey, what's going on, team? It's Ricky with Tactical Solutions. I hope that you guys enjoyed that overall recap on the day. And one of the things that I want to talk about is not even focus so much on my trading style, but one of the questions that we've been getting very often is the overall performance of the market and how it's been doing exceptionally well. And one of the things that I think is so amazing about this is this idea that people feel like it's almost impossible to beat the average growth of what the stock market offers on an average yearly basis, which is anywhere around like 7 to 8%. So let's say it's 8% on a yearly basis. But one of the things that you guys can even take into consideration with a little bit more, again, I'm more of a day trader, which is viewed to be a little bit more aggressive, not so much of an investor in the stock market. So, and the really cool thing about this is that, again, you don't even have to day trade when it comes down to the market. I understand that there's a higher risk, higher reward when it comes down to that approach, and I have a really big focus on natural gas and natural gas ETNs, and that is my focus. It's not made for everyone, and one of the things that I love empowering people to do is the overall idea of finding your niche. So in this video, I wanted to share how with very little simple steps, you can then begin to find your edge in the market with not just day trading, but swing trading and overall investing in whichever one you find to be, again, the most suitable one for you. So one of the first things that I really like to take into consideration is one of the biggest mistakes that I have seen a lot of our traders make is, again, I run the largest YouTube channel and the largest Facebook group for those that day trade in the stock market. So we go through a lot of questions, we go through a lot of people making mistakes or either their series of best practices. And the biggest mistakes that we see people make is trade based off other people's opinion or hopeful traders. They think that they either have it all figured out or they're not informed enough and they just try to make it or break it. Let's be honest, the stock market is not an easy market to be successful in. It doesn't mean that it's impossible, but I think that we can all agree that nothing in life worth having should come easy, and the stock market is no exception. And it 100% takes a lot of time, a lot of practice, and a lot of testing to inform yourself about what the stock market has to offer and maybe what's best for you. So the first step that I would take when it comes down to getting started, if you're really trying to have an edge and beat the average growth of what the stock market grows on a yearly basis, is begin to inform yourself about the do's and the don'ts. And what I mean by that is there's so many different trading styles, and I'm not here to say that one trading style is better than the other. It really comes down to you and who you are and how you're wired. And an example that I want to give you is, again, I think it's so important that when you're just getting started, you can test everything it is that you are learning. So there's an amazing thing now called paper trading or simulation trading, which allows you to practice everything it is that you are learning with no money at risk. It's absolutely for free. You can open up a free account today and begin to trade as soon as tomorrow with fake money, but with real stocks. So as you're learning about all these new working systems and best practices, you can begin to test them. And the really cool thing about this is that not all of them are going to work and not all of them have to. The amazing part about trading or investing is that you find which best practices after testing them work best for you, and then you can begin to kind of like build your criteria of best practices. And once you have a nice working system where you're noticing that you are consistently growing your account, you're managing your risk, and you're understanding what you are doing, that is when I think you'll begin to see, again, a big change on your trading style, because again, you're more informed and less hopeful. And again, I think that's one of the biggest mistakes that we see a lot of our newer traders make. One of the other things that I wanted to talk about is as you're informing yourself about, hey, do I want to be a day trader, swing trader, or overall investor, you begin to practice all these different potential working systems. You're testing them. And one of the things I think is very overlooked is the idea behind risk management. So it doesn't even matter if you're a day trader, a swing trader, or overall investor. The idea behind risk management means that you at least have some form of stop loss or some form of, again, exit plan to get out. One of the things that I have also seen a lot of traders make a mistake on is the idea that all they think is going to happen when they put money into a stock is that it's going to appreciate in value. And if you've at least tested this in the stock market, that is definitely not the case. So you need to be informed enough to understand that there's two sides to every single trade. And if things begin to go south, you need to make sure that you have some form of risk management in place, and over time it will become more easy. It's never going to be super easy to do or fun to do when it comes down to cutting losses or managing risk, but I think it's a very overlooked best practice that needs to be tested on a consistent basis. And what I mean by that is making money in the stock market, especially when the overall trend and direction is in your favor, is easy. Making money in the stock market is the easy part. It's when things begin to go south that they begin to turn sour. That's when it begins to become challenging because emotions come into play. So as you're testing all these best practices on how to make money, I would set time aside, and I know this sounds funny, to practice cutting losses. By watching your position size, by setting a max percentage or max dollar loss. There's just so many ways that you can practice managing risk. But one of the things that I'd love to empower our traders to do is to not be a hopeful trader and thinking that every trade is going to go in your favor, but it's understanding and having an open mind that we're not working a 9-to-5 job, right? Just because you input and invest a number of hours does not directly compensate you a direct output of pay. You can invest hours, you can invest months, you can invest years and money into this market, and you can walk away with actually taking a loss. And that is why I think it's so important. So it doesn't matter how much you grow your account, because if you don't understand the importance of managing your risk, it's only a matter of time to give it back. So please set time aside to practice managing risk, especially if you're going to set time to simulation or paper trade. There's 4 big focuses that I have, and again, this is based off of my overall experience, but there are 4 focuses that I have found to be very, very important. So we've talked about the overall idea of risk management and why that's so important. I don't think we have to repeat that, right? So taking that and moving on to the next one. The next one is patterns. I'm more of a day trader, so therefore I trade a little bit more on the technical side, but I have found patterns, again, to be very, very useful. Patterns tend to repeat themselves with the overall idea that they don't necessarily have to, especially when fundamentals or overall news comes into play. But as you inform yourself more about patterns, I think you will pick up more on trends and understand when to buy, when to sell, and maybe when to not even enter a position. One of the other things that I want to talk about is, again, having this risk to reward ratio. It doesn't matter if you're a day trader, swing trader, or overall investor. The idea of having some form of criteria or some form of risk to reward needs to be something that you take into consideration. We have a lot of people that just enter trades with, again, the overall idea of just hoping that they make a profit. If you have this golden ratio that we like to call it, if you're part of the Learn Plan Profit Group, an example can be a 5-to-1 ratio, which means that, again, every single time that I take a trade, I will only take a trade when it meets that criteria. Therefore, it needs to offer a 5% margin of profit with the downside potential or a risk management of 1%. So even if you do take 3 bad trades and you lose 1% every single time that you do, 3 out of the 4 can go south, but it's only 1 that has to go according to plan, which is a 25% success rate, and you can still end up in the green. But again, it really comes down to how you seek opportunity and also how you manage that risk. So I think structure and discipline is a big part that is, again, very overlooked in this market, especially for our beginner traders. Now, the last thing, again, that I love to remind our traders to do is the overall idea about finding it. So obviously I have a big focus on, natural gas and its overall performance. And you guys could see that for the past, 2 months, natural gas has aggressively sold off. So I like to trade ETFs and ETNs. Therefore, as natural gas sells off, there's an ETN named DGAS, which is the inverse of, in a sense, UGAS, which then does the exact opposite of what natural gas does. And what that means is, as natural gas sells off in price, DGAS does the exact opposite. So therefore, as natural gas continues to sell off, DGAS continues to push up. DGAS performance in the past 2 months has risen over 60%, which I have found to be very promising as a day trader. Again, that is my edge. But one of the amazing parts that I think that the stock market has to offer is that there's so much opportunity everywhere. Taking Tesla into consideration, Tesla has grown over 40% in the past 2 months. Taking Facebook into consideration, it's grown nearly, if I'm not mistaken, 5 to 8% in the past 2 months. Amazon, Shopify, Netflix, they have all done exceptionally well. And they've beaten the average 8% return in a year in just 2 months. So the idea isn't that, again, it's impossible to beat the average rate of the stock market. It doesn't mean that it's going to be easy. But again, as you begin to inform yourself about the do's and the don'ts, you can become a little bit more educated about what to do and what not to do when it comes down to where to put your money in the stock market. So I want to close out this video with the overall idea that, again, there's so much opportunity that the stock market has to offer, but of course it all comes at some form of risk. There's no question that if you're probably watching this video, that you're probably very intrigued about the stock market and super pumped to get started. All I want to remind you is to stay close to what motivates you and to what you enjoy most about the stock market. It's supposed to be fun. It's supposed to be something that you enjoy doing every single day. At least for myself, it's one of the things that I enjoy most about my job is as a day trader, I am challenged every day with my ability to seek opportunity. Obviously, not every day turns out to be a green day, but again, my job as a day trader is to show up, seek opportunity, and when things begin to go south, to manage my risk. So don't just always think about the upside and the beautiful part about the stock market, but also, again, don't be a hopeful trader and be someone that has set list of criteria or form of risk management in place. So when things do begin to go south, that you are at least someone that can take initiative and cut those losses to keep those small so we can continue to grow your account to hit whatever your yearly goal is. So I really do appreciate you guys' time. Don't forget to join our free investing group. Again, we are the largest one on Facebook for those who day trade in the stock market, and that's going to be that first link down below. We have nearly 240,000 members, and we'd love to stay connected with you as well. Don't forget to drop a thumbs up if you feel like I earned it, and feel free to drop any comments down in the comment section that you think I might have missed when it comes down to talking about the series of best practices when it comes down to investing and beating the overall market in 2020. I really do appreciate you guys' time. Don't forget to subscribe, and like always, let's make sure that we end the year on a green note. Take it easy, team.